Hello everyone, welcome to the channel. Day before yesterday, I marked these two supplies and gave it to you, saying like if market opens and taps into one of these supplies and gives a negative reaction, then on a small pullback we can take the market down. I clearly said market can react from this supply or from this supply. So yesterday's price action was very simple. Market opened here, went up, tapped into this, gave a break of structure here. So on small pullback, we should have entered put and captured. If you had seen this, it was around 500 and the closing place was somewhere around 360. If we had just targeted 100 points, see, our goal should be very simple. We need to target 100 points on a daily basis. And today market opened even more 100 points today and gave a positive reaction from a demand, from a no man's land. Actually, it did not come from a demand. If you just zoom out this chart a little bit, you can see that there is no place in the market here why it should reverse from here. If I just draw you a line from this lowest point and drag it all the way till here, we can give an argument that market has done a small liquidity sweep here, meaning market did not break this and give a closure below, rather it hunted the liquidity here and a big institution has stepped in and taken the market higher till where it went, till the open supply which it created as part of yesterday. This is again in 30 minutes time frame I'm talking about. Okay, so this supply was not completely tested. There was a small to small gap here, but that was retested today. So what about tomorrow? Tomorrow, see, the plan is going to be simple. If this supply breaks with a closure, meaning if market breaks this high and sustains in this supply itself like this and gives a small price action in a positive reaction, then we can easily see a target of 23,730 on the upside. Okay, if this rally continues, we can see a extended target of 23,800 on the upside. This is for the upside. Okay, so what about downward direction? Since market has given a big rally, okay, so the ideal to ideal scenario is this is a demand which is created by the market. So there are chances that this demand can be retested by the market and give a positive reaction again from this demand like this and then take the market even higher. Okay, so this is a ideal scenario which we will be targeting to. So in order for this to happen, you see where the market is 23,520. Where is the demand sitting? 23,300. 200 points market has to come down, give a positive reaction and then pull the market up. This is going to be impossible for the market in one single day unless there is some strong news. So what is the ideal scenario, what it can happen? So the best to best case scenario is tomorrow market should open gap down. So if market opens 23,350 or 340 or 330 somewhere here, taps into this demand and crosses the opening price like this, and then I am interested to take the market higher at least till today's closing, till 23,500. This is the best case scenario for tomorrow. I am not sure whether market will open gap down tomorrow because gift nifty is showing 23,470, which is almost flat to small to flat opening. Tomorrow morning I'm not sure where the market might open. As of now, gift nifty is showing 23,470. If market tends to give a reaction something like this, see what we can see from this last leg of price action is market went up, gave a small closure below this, now it is trying to go up. Now if it crosses this low point, then on small pullback we can target this demand. There is absolutely no doubt we can easily target this demand, but you should not confuse yourself with 100 plans. Make your trading life simple, make your trading setup also very simple. You have to have one setup, one set of criteria. If market comes here, fine, I will trade. If market breaks this, I will trade. Rest other scenarios, meaning market is doing drama like this and trades in between this zone, I'm not interested. Simple as that. Keep your trading discipline as simple as that. Today I read one of a story of one of the most successful trader from Japan. Okay, so this guy, you might have known him. If you know the person's name, put a comment in this particular video. Let's see how many people can guess his name. So this guy lives in an old apartment, and he started with a small capital somewhere close to 100,000 um, 100,000 INR. It's very, very small in Japan currency. Okay. So he started with such a small capital, and today he has built that capital in close to 8 years, somewhere close to 13,000 crores. 13,000 crores he has built the capital of 1 lakh. It took him 8 years. So he was given an interview, and the only three things he said in his interview as to what is the secret of his success in trading. Rule number one is trade small or go broke. Today, being expiry, if you had thought like, okay, tomorrow, today market is going to go down all the way, go down all the way, and you kept on adding put, averaging, what would have happened? Your capital would have been gone. Rather, if market is giving a positive reaction, try a call option here and see what where the market can go to. It can go till this supply. So target that supply. Entry point is somewhere around here, 387, 400, somewhere there. Target is 500, 100 points you capture, come out. Or yesterday, if you had entered here, target 200 points or 100 points, like how we discussed in the market as per our trading scenario. That is one thing he told. Like, trade small or go broke. Second thing, trade only when my setup comes in. Meaning he does not have a FOMO. Tomorrow, if market opens here and continuously goes up like this, keeps on going up. Okay. So would you be saying like, okay, today my setup did not come, I will not trade? Or would you be interested to enter into the trade, trying a call option and see how much money you can get? That is his second rule. He does not have any FOMO. He trades only when his trade setup aligns. Third thing, risk factor, meaning he risks only 0.5 to 1 percentage of his capital every single trade. See, trading is more like a probability. It is not like a normal 9 to 5 job. Okay. In 9 to 5 job, what do? You go and give your time to someone. Okay. Basically, you give your time and skill to someone, saying like, I am efficient in this particular skill, be it automobiles, be it civil works, be it IT, whatever the sector may be it medical, whatever the sector may be, you are giving your time and skill to someone, and that someone is using your time and skill and they are paying you money. Okay, there is no loss in this particular business of 9 to 5. That is the reason why many people prefer 9 to 5 jobs, because it is safe. But trading is not like that. Trading is a game of probability. Today you will think like market can go up, okay, and you can buy a call option. If the trade goes against your conviction of market going up and market starts to going down, then you should know that, okay, this was my entry point, this is my SL, my SL has been hit, I will close this trade and I will exit the trade. Or on the other side, if market is going up, would you have the courage to hold the trade till it goes and hits your target? Or would you see the profit in your screen and say like, I have made so much profit, this is enough for me and I am coming out? What kind of a trader are you? You need to understand. See, trading will teach you so many things which a normal 9 to 5 job or which a normal course or anything will not. No, but nothing can teach whatever trading can teach you in your life. Trading will teach you to stay disciplined. It will teach you to stay patient. It will teach you to understand the importance of money. Today you might have 1 lakh, okay, in your trading capital you might have 1 lakh, and you might have made profits, you might have made so much money from this 1 lakh, and you would have grown the capital to 2 lakhs. For example, the same person, if you don't have that 1 lakh capital 10 days down the lane because of over trading, because of blind trading, because of revenge trading, because of FOMO entries, because of blind to blind gambling, because you cannot stay disciplined, whatever the reasons may be, 5 days or 10 days down the line, you don't have that capital, what would be your mindset? First things what will come to your mind is, I should have saved that capital. Why did I overtrade? Why did I revenge trade? These are your drawbacks. Take a notebook, okay? Take a notebook every day at the end of the session. Write how did your trading went. When did you enter the trade? What was your reasoning behind the trade? Was it part of your system? Do you have a system in place? If you don't have a system, are you interested to learn any particular system? Learn any one system and follow that system for 10 days. That will make you so much money. Every system has 70 percentage of win rate. Okay, be it Bollinger Band, be it RSI, be it support resistance, be it SMC concepts, be it whatever the case may be, whatever indicator you are using, whatever it is, every trading system has 70% win rate. What it means is, out of 100 trades you take, 70 trades are going to give you profit and 30 trades are going to give you loss. If you don't have that mindset of taking the 30 trades loss, you will end up losing your capital almost within 2 to 3 days. Because if you leverage your entire capital on one single day and you hit your SL, that SL will not have a rule of 1% stop loss. What do I mean by 1% stop loss? If your capital is 1 lakh, okay, if you have a trading capital of 1 lakh, so the risk per trade should be defined in such a way that this 1 lakh you have to trade for at least 30 to 40 trades, minimum to minimum 30 to 40 trades, which means on one trade you can lose max to max of 2 to 3k, 2000 to 3000 you can lose on one trade. What does it mean? If you have defined a stop loss of 20 points on your contract, you have bought it at 100 rupees and you have defined your stop loss at 80 rupees. Okay. So risk per trade is 2000 to 3000 is what I defined when it comes to 1 lakh capital. So your lot size for 2k loss should be defined as 2 lots, meaning if your stop loss hits 65 into 20 is 1300 rupees. Okay, max to max I said 2 lots because the 130 into 20 is somewhere close to 2600 rupees, which comes to 2 to 3k. So with 1 lakh capital you can trade only with 2 lots on a contract which is running at 100 rupees with stop loss of 20 and a target of 60. So when your target of 60 hits, meaning you're risking 20 rupees, 20 units in that contract, and you are getting 60 units of the contract with 2 lots, you are eventually making 1:3. That is how trading works. What it teaches you is, out of 10 trades, if 3 trades loses, okay, you will end up losing 10k or 9k of your capital. If 7 trades win, you will end up making 42,000 of the same thing. So end to end, out of 10 trades you will make 30k. That is how you should understand risk management. This and all nobody teaches, nobody listens also for all these risk management topics because they think it is boring, they think it is waste of time. Also, do not trade every day. Do not trade every day. If you made profit today, take one day off. Go spend time with your family, take them out for a dinner, go for a movie, go for a lunch, proper to proper lunch, give them a break. Every day if the wife is cooking at home, give them a break, let them also have some good time. That is how you should think as a mindset. Okay, I hope you learned a thing or two from this video. Thank you so much for watching. We'll meet in the next educational video.